Happy weekend guys, and welcome to a new week. In today's video, I'll be teaching you guys how to trade breakouts, a profitable strategy with over 80% win rates. So when I say breakouts, it basically means spotting consolidations in the market and waiting for a breakout of those consolidations to look out for buy or sell opportunities. So working with this strategy, the first thing you have to do is to spot the market structure or the market's direction on that current time frame you are looking to trade in on. So here we got a bear structure, a downtrend where the market created series of lower highs and series of lower lows. And we all know that on a downtrend market, our interest is on the sell side of the market. So looking out for sell opportunities. So the next thing we have to do is to spot out consolidations in these downtrend markets. So wait for the breakout of these consolidations to sell. Remember, the market is on a downtrend, so we're looking out for sell opportunities in the breakout of this consolidation. So here we got the market consolidate, created series of equal highs and series of equal lows. So we have to wait for a candlestick break and close below this consolidation to sell this index. So being that we're looking to sell, we have to wait for a candlestick break and close below this consolidation lows to sell this index. So here we got a candlestick break and close below these lows, which will be getting our entries on, shorting this index, and you can see how our price dropped after this breakout. Stop loss should be above this candlestick that broke below this consolidation. This is the consolidation lows and this is the consolidation highs. So let's do it to spot this consolidation highs and lows. So imagine taking a sell trade on this candlestick close, stop loss. Let's mark it out. Entries here, the level of 627,740. Stop loss should be at this point above this candlestick. I can see how our price has dropped. This is over 2:1 to 3:1 risk to reward. That's risking about $20 to get $60 or $80. A good trade caught here, or risking $200 to get $600 or $800 on these sales, and more sales is still expected because this index is on a downtrend overall. So let's spot more consolidations and more market structures and see what happened afterwards. So this for this here. So here we got a bearish structure where the market created series of lower highs at seen here and series of lower lows. So at this point, we already know that we got the sell interest on this current market here. The next thing we have to do is to spot a consolidating market formed in this bearish structure, which we can see I've spotted one at this point. Equal lows formed here and equal highs. Entry should be on a candlestick break and close below this consolidation lows for sell opportunity because the market is on a downtrend on a bearish structure. So we got the lows formed here and we got this candlestick that broke and closed below this consolidation lows, this particular candlestick. So getting our entries here, stop loss should be above these candlestick highs. Entries at this point, stop loss here above this candlestick highs. This is the highs. Yeah, TP should be at this point. This is over 3:1 to 4:1 risk to reward. So imagine taking a sell trade here, good profits backed as well, working with this profitable price action strategy. So that's for this formation. Let's just spot more formations and more structures. So we got the markets in an uptrend. I've seen a consolidation structure already, so we got an uptrend formed here. The market formed series of higher lows and series of higher highs, a bullish structure basically. So definitely our interest should be on the buy side of the market. The next thing we have to do is to spot a consolidation structure in this bullish market structure, spotting the consolidation highs and lows, consolidation lows here and consolidation high. So our entries should come in on a candlestick break and close above these consolidation highs because we're looking out for buy opportunities. This is a candlestick break and close above. Getting our entries here on the close of the candlestick. Entries at this point, stop loss below this candlestick here. And you can see how far price bought after this breakout because the market is in an uptrend. Massive buys got here. Over 4:1 risk to reward on this trade. That's risking about $100 to get $400. Massive buys will be caught here if you are to get an entry on this breakout, working with this profitable price action strategy. This strategy works on any time frame and on any index. You just spot the market structure first lead and look out for consolidations in that market structure. So if you are to spot a bullish market structure and a consolidation, you have to wait for the breakout of that consolidation to the upside to look out for buy opportunities. And if you have to spot a bearish market structure and a consolidation, you have to wait for the breakout of that consolidation to the downside to look out for sell opportunities. So that's how easy and profitable this strategy is. This week we'll be going hard on synthetic indices in my trading community. So you don't want to miss out on my fire trade signals and on the higher probability trade setups I share. So join my Telegram channel. Link is in this video description and is pinned on this video comment section. So click to join and don't miss out. For more educative videos like this, do well to smash the like button, drop a good comment on this video, and subscribe if you're ready to subscribe. And to my returning viewers, I appreciate your support for always engaging in my videos. It means a lot, guys. Let's do more and do have a wonderful day.